I think we're headed for some spectacular gains, and it's going to be very similar to what we saw after the crisis of 2008. And this will be the third phase of the final phase of this bull market. And like Dave Morgan always said, 80% of the move comes in the last 20% of the time. So we should really be seeing some fireworks happening. Hey, it's Mike Maloney, and I'm with Alan Hibbard. Once again, Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Great. And so we have had some pretty thrilling past few days. Gold took off like a rocket last week, and we did a video on Friday, but earlier in the day, and it was this great video. But then gold broke into record highs, and it negated the whole video. But it was sort of predicting that gold would break into record highs based on some charting that I had done. And so in that video, I was presenting the charts to you. So we're going to do sort of the same format this time with the update of where gold went over the weekend, and the gold and silver. And so this is pretty spectacular. So, we did the video on Friday, and then gold hit these record highs back here, and we had to just not use the video that we had done. But then in overseas trading, when the markets opened back up early in overseas trading, we hit 2144. Now, typically when you're looking for a breakout, I don't know if it's still the same, but back, when I was writing my first book back in 2005, 6, 7, 8, they used to say that if you get above a previous high you get above it by 3% or so, then it's like an absolute confirmation. So every $20 is 1%. So you only need $60 over the previous high. And we were at 2070. So 60, we far exceeded the 3% already. So for a lot of technical traders, this is absolute confirmation that the previous highs, that triple top that was in place, has now been violated to the upside. So very, very positive, strong, bullish move. You got anything to say on that, Alan?
No, I totally agree. I mean, this is overwhelming. when it exceeds the previous high by this much, it's really hard to claim that, we're going anywhere other than up even further.
Right. Well, you weren't doing this back in 2011. We are now in territory. You're going to find this very exciting over the next several months here. We are now in territory that we haven't been in since 2011. Well, actually, there was a few. If I go to a max chart here, there were a few days right here where we got into. So that was 2020, and you and I were working together. But you weren't doing these videos. But when you're in this territory, here we have an inverse head and shoulders pattern back in 2008 and 9. And then it broke to the upside of that inverse head and shoulders pattern. And typically the measured move is you take the neckline, which is right there. These are the two shoulders, actually. So the neckline would be about there. And the difference between the head and the neckline, and you use that neckline like a hinge, flip it upside down. It made its measured move, but then it pulled back and did another inverse head and shoulders and another move, and it kept on going, and it ended up being like 4 or 5 times the measured move. Well, we have this inverse head and shoulders pattern here that it has just it's broken out of the triple top, and it's gone past the neckline of the inverse head and shoulders pattern. So we are in this clear air territory, plus this giant cup and handle from, goes back to 2012, but you could even say 2011, this giant cup and handle or pan and handle, which is also very bullish. And I actually don't know what the measured move is on that. If you take this and turn it upside down, you're talking about some pretty spectacular highs. But so we were back at the 5-day here, and that 2144 high. Let's take a look at silver, and silver was up at 2624. Now I don't know, now we're referring to they as in the potential manipulators, which, there's an argument as to whether they exist or not. But we do know that, GATA for years and years and years was always claiming that the precious metals markets are heavily manipulated. And then so that GATA was gold, and Ted Butler was like the leader on the silver side, analyzing it and showing the evidence and he would actually send letters off to the Commodities and Futures Trading Commission, the Attorney General, the Securities and Exchange Commission, claiming that there was this manipulation going on that they are ignoring, and this needs to be investigated. And he would supply all of the evidence. And so now we have seen people go to jail for years and years and years. No, there's no manipulation. Oh, you're manipulating? Jail time. So we've seen some of the biggest fines in history, and these manipulations turned out to be true. Well, the price of gold is back down at price of silver back down at 2489 right now. Price of gold 2040. So it's fallen a whole $100. But I didn't put the commitment of traders report in here, but when I was analyzing commitment of traders over the past several weeks, it was suggesting that gold now had room to fall, but the upward pressure that is under the underlying fundamentals just show that gold and silver have this tremendous support under them. What's been interesting too, and I'm sure you've been watching this, you're a big Bitcoin fan, is the tremendous correlation between precious metals and Bitcoin. What have you got to say on that?
Well, actually, yeah, I've been analyzing the two and comparing them for 7 or 8 years. And the movements in Bitcoin and the movements in gold are unbelievably similar. They have the exact same shape and concavity. So that's worth an entire video of its own. But yeah,
which we will do for everybody in the future.
Yeah, so definitely we'll do that. But yeah, I look at Bitcoin as digital gold. I know a lot of people try to debunk that narrative, but I think they're so similar. They have so many things in common. Not only the fundamentals, but the technicals as well, the way it moves on a chart. So yeah, I mean, I'm just bullish all the way around for all these things.
And Bitcoin has done a huge breakout now. It's back up in the 40,000s. It has reason, just like gold. Well, actually, gold is in clear air now as far as they've gotten it back down below that 2144 high. But Bitcoin has the high was in the 60,000s, and that was in 2020, wasn't it?
Yeah, just shy of 70,000. I'm like 69, depending on the exchange you look at. Yeah.
And so we're at 42 or 44. Where did it hit?
I saw it at 41. It may 41. Have hit a different number. I actually don't watch it that often, believe it or not.
Yeah. Well, after 20 years doing this, I don't watch the gold price every day. People say, "What's the price of gold?" I don't know, but we're going into an area that's going to be pretty darn exciting, I believe, with these moves. Now, on Friday, you and I did a video showing that we were waiting for a chart for it to do a breakout past that 2072 high, and we were looking at the daily, and it hadn't, and here again, you very clearly see the cup and handle, the inverse head and shoulders, the triple top, which is normally a bearish sign unless it breaks to the upside. Then you've got one of the most bullish signs there is, and we broke out to the upside on the daily. This was the daily chart is the one that ruined the presentation, and we couldn't release it. But we made a very good, very positive video about this. One of the things that I had pointed out, hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer, and now back to the video. I had put together a series of charts and was presenting them to you. But back in see the volatility of how much it can go up and down and up and down. And since this is a logarithmic chart, every inch change on this chart is the same percentage move as an inch change way up here. And you can see these wild swings compared to the little tiny swings that we're getting now. They're not, it's like 10% of the volatility or something, or 20% that we're experiencing today as compared to the early 70s. But when you look at this bull market, and people need to, the book is on Amazon.com, The Great Gold and Silver Rush of the 21st Century. And one of the things that's in chapter 7, I believe it is the difference between the 70s bull market and today. Back here, until the last day of 74, this was just about 5% of the world's population. It was Western Europe and Canada that could legally purchase gold, and the price was all driven by the exchange in London. It was illegal for Americans to own gold until the first day of 1975, and illegal for Australians until the first day of 1976. And so here it's about 10% of the world's population driving the price of gold. Well, over this period of time here, during this bear market in precious metals, we've gone from 10% of the world being able to legally buy or access. I mean, it was legal in South America and in Africa, but there were no exchanges. There were no precious metals stores. There was nobody. People were worried about how are they going to afford to eat tomorrow? There was Sally Struthers was this actress from MASH, and she was on these commercials all the time in the early 80s, showing you all these starving kids in Africa, the Caribbean, South America, Eastern Asia. And, there were literally kids starving to death, famine all over the world. There were no billionaires in Africa or South America. And so during this bull market, there was this huge shift. China, which had famine and starvation going on a regular basis. Mao died back in here somewhere, and they became a very capitalist country. It's the Communist Party only controls the commanding heights, the high ground, the biggest industries in China, and everything else is the Wild West of capitalism in China. And their economy just turned on a dime and grew so big. And now we've got not just the Hong Kong exchange, but the Shanghai Gold Exchange. And there's exchanges in the US, where the former USSR, Russia has an exchange and gold is traded on it. It's global this time. The difference is that there are 18 times more people on the planet that can now legally access and buy precious metals. And so I think part of what we're seeing is this support of the world creating. Since this peak in gold back here, there is now 18 times more people that can legally access and purchase precious metals. But there's also 55 times more currency on the planet. And there are 200 times more billionaires, 200 times more millionaires, 220 times more billionaires than there was back in 1980. And so this is just the beginning of this enormous slingshot move. If you want to know more about this, go to Amazon and get The Great Gold and Silver Rush of the 21st Century and read Chapter 7. You will be amazed at the Time magazine articles that I'm quoting showing the panic that was going on once gold broke. It sat at $400 an ounce here for November and December. And then in late December and through January made this move. And it was literally a panic to buy. It was fear of missing out for most, but for a lot, they were looking at the dollar. Wow, it's just 8.5 years since it's been a fiat currency, and it looked like the dollar could fail. And if gold had continued its runaway, it would have. Got any comments on this, the daily chart, which had not, when we did the last video, it had not broken out into brand new highs, and now it has.
Yeah, exactly. Last week, we looked at 5 charts. We looked at daily, weekly, monthly, quarterly, and annual. And 4 out of the 5 had all set records, but daily had not. And now,
Right.
with one extra data point, daily has joined the other charts, setting a record. So, I mean, it's very exciting. Like to just claim, like, all right, we hit our peak and now we're going down. I mean, that's just so ridiculous. I mean, that just doesn't seem informed. I don't know who could make that argument or what kind of reasons they would give, but
because so many people were worried about buying at a high. And, what is the downside risk compared to the upside potential? And the downside risk to me for gold is not much. So yes, that was that. It was a shame. It was a good video. It was a shame almost that we set new record highs right after we produced that video. We're seeing these record highs, and it became negated. So, yeah, this is really something that is happening. But I believe that this very, very compressed volatility is because we have this tremendous upward pressure here building that is a support, and it's fundamental upward pressure. How much currency exists on the planet, how many people can buy, the exchanges that are all around the world, so that gold is really traded 24 hours a day pretty much now. It's a completely different, you see people like right now. I did some interviews with some real estate people, and I was talking with a bunch of real estate people recently, and we show that this time around, back here, bonds were undervalued. Real estate was undervalued by 1980. The stock market was tremendously undervalued because from 1966, it bumped its head on 1,000 points, went sideways until 1982. And so it didn't break into new record highs until 1982. And so you didn't have the 3 main pillars of the economy: the financial sector, bonds, the debt sector, bonds, and and real estate. The 3 main pillars of the economy were not in massive world, all-time in history, record bubbles. And today they are. The stock markets have already been deflating, and we'll see what happens when they start the next round of QE.
Yeah, because it's going to happen. They're going to cut rates and quantitatively ease, they call it.
Yes. And so here is the weekly for everybody. And I want people to notice one thing too. When you're looking at charts of gold, a lot of people will present these historic charts where it's going way back. Very quickly, just look at these 2 peaks here, 1980 and late 80 or early 81, whenever that was. This dead cat bounce of gold, it did this pullback down to around the 400 and something area, and then bounced up to like 650. So, and we go to the weekly, very similar. But when you go to the monthly, you'll see that they're almost identical. And so when you see that, you know that you're looking at a monthly chart, and you know that that's that when you look at a monthly chart, I can't remember what the high was in gold, but it's like 625, not 873. And so you're not looking at gold's full potential when you're talking about now 873. That was an intraday high, but there was a close at 850. And if you'd gone with a weekly, you probably would have been able to catch 800, or so it's not showing you when you look at a monthly chart. And most of the ratio charts that other people do will be based on monthly data. And what you and I do, if we can only source monthly data to show the full potential, we'll go in and insert the daily, the close or the average for the daily on the highs and the lows, to be able to show what the true potential, the full swing is here. Because when you're just using the monthly, you're truncating a whole lot. And so these ratio charts sort of they're giving you sort of an average when you go with a monthly. Am I correct here?
Yeah, absolutely.
Yeah.
You're spot on. The monthly really smooths it out, so it doesn't look like much is happening. And then when you put in those daily moves, you get the bigger swings that are more indicative of what actually happened.
Yeah. So I just wanted to show that to everybody so that they know what to watch for when they're looking at charts, especially the ratio charts and stuff that are put together by other people. This is the quarterly, and look at what it does to the all-time high and the dead cat bounce. It combines them pretty much. And then the annual. And I just want to remind everybody that there is this saying among traders, the trend is your friend. You've heard that before, right? Yeah, yeah. So what is the trend here? It's definitely up, and I consider this one bull market and this just a correction in the middle of that bull market. And even though it took close to a decade, this pullback that we had from 2011 to the year 2000, I guess, 2019 or 2000. I'm sorry, 2020 or the year 2019 or 2020 is, to me, it was something difficult to wait through. I'm older. So got any comments on you've already said your comments on the weekly, monthly, quarterly, and yearly, but the confirmation that we've got here, 2024, in order to negate this, even though we are seeing gold doing this pullback right now, that they've managed to smash it down, it's going to be impossible for anybody trying to manipulate this to hold gold down for like a year. And so you got, to affect the monthly chart is going to be a very difficult thing. This also shows the cup and handle and the inverse head and shoulders, even on the quarterly. So this is it's like one confirmation after another confirmation after another confirmation, all saying yes, 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 and yes, right?
Yeah, absolutely. I mean, I'd love to hear someone who's bearish on gold and hear their case and see their data, because I don't know what they possibly could have.
Right. And so what this does here, I've pointed this out ever since the third high on this triple top happened. I produced right away when it did a pullback from that. When it made a triple top and did a pullback, I produced an insider's video for the people that have made certain size purchases from GoldSilver.com. They get to find out what I'm doing with my investments, and then I keep them informed now and then on markets. And I went, wow, this is going to make an inverse head and shoulders. I made that video, and I showed the pan and handle so that people could clearly see it. or a cup and handle, whatever. When you look at a very long-term chart, looks like a little bit more like a cup and handle. But if you do a shorter term chart, it stretches this cup all the way across and the handle gets very long. So it looks more like a cooking pan and handle. But I also drew, and this isn't the same drawing, but I drew a typical pattern is to, the measured move is you take the neckline of that head and shoulders and the size of the head and use that neckline like a hinge and you flip it upside down. So this would give us that measured move of probably around the $2,500 area, and then some pullback and retest. But it looks like we're already doing the retest. We only went to 2144. And so if that's true, we should be seeing 2,500 and then some little jag, and then it's off to the, you never know where the future is. But when you incorporate this cup and handle and the head and shoulders, I think we're headed for some spectacular gains. And it's going to be very similar to what we saw after the crisis of 2008. And this will be the third phase of the final phase of this bull market. And like Dave Morgan always said, 80% of the move comes in the last 20% of the time. So we should really be seeing some fireworks happening.
Absolutely. I couldn't agree more. And I've been doing a sort of secret analysis on my own that I haven't shared with you yet, Mike. It's not quite ready to go, but very soon I'd like to do a video on it and just show, kind of put some numbers behind how steep that bull market has been in the past and how steep it could be like right now, very soon.
Excellent. I really look forward to that then. This is awesome. So have you got anything else to say?
No, that's it. I just, okay. Stay tuned for more. I can't wait to see what the future has.
Yeah. We've got a series of some pretty good videos coming up very shortly. So I want to thank everybody for watching. Please like, subscribe, and smash that, the notification bell as well. And thank you very much, Alan.
Thanks, Mike.
Hi, I just wanted to tell you about GoldSilver's 111-ounce silver giveaway, where you can win 111. One 1-ounce silver bar, one 10-ounce silver bar, and one 100-ounce silver bar. So enter today and win.